And the latest data on the U.S. economy shows the worst quarterly drop on record in the second quarter, as the GDP from April to June period plunged more than 30% on an annualized basis. The Federal Reserve has also rolled out a sweeping rewrite of its approach to monetary policy, putting new emphasis on bolstering the labor market and less on inflation. Our Seung-jae tells us more.
According to the U.S. Commerce Department's second reading of the U.S. economy in the second quarter, the nation's GDP plummeted a record 31.7% on an annualized basis. The announcement on Thursday was revised down from the 32.9% initial estimate. Even with the better-than-expected revision, it's still the worst-ever economic contraction in U.S. history. The drop was also more than 3 times the previous all-time decline of 10% in 1947. Many expected such negative data as last quarter businesses shuttered and millions of workers lost their jobs as the world's largest economy went into lockdown due to the COVID-19 pandemic. The U.S. economy dropped an annualized 5% in the first 3 months of the year before the COVID-19 outbreak began to make its presence felt in the U.S. in February and March. This comes as the U.S. Federal Reserve announced a major policy shift on Thursday, saying it is willing to allow inflation to run above its goal of 2% for some time. The strategy suggests the Fed's key overnight interest rate, which is already at near zero, will stay there for potentially years to come as policymakers shift their stance regarding higher inflation. The Fed will instead focus more on bolstering the U.S. labor market. Fed Chairman Jerome Powell said that despite a lot of strength in the economy, the job recovery faced a long tail of a couple of years as millions of American workers have been displaced from restaurant, travel, and similar jobs and will struggle to find new employment and will need steady support from the government. Seung-jae, Arirang News.